Lots happening in stock-specific action, but let's put the spotlight on the consumption basket yet again. Sunil Duggal, the former CEO of Dabur, as well as Abneesh will join us from Nuvama to talk to us about Abneesh Roy, that is the Executive Director from Nuvama Institutional Equities, to talk to us about what we should make of the FMCG sector. But let me begin by asking you, Mr. Duggal, we were just speaking with, Mr. Sanjeev Mehta as well. The former boss at HUL deserves no introduction, but he was talking about how India could be to consumption what China was to consumption for the last 2 decades. Would you concur with the view?
Partially, yes. I think consumption in India is still, we have to, there's a huge upside here, which is waiting. It's low by Asian standards, forget about international standards. So there's a lot of catching up to do. It'll take time, but it'll happen, and there's no doubt about it. I think India's consumption will drive global consumption for many decades ahead.
In an early revival, I would like to use the word green shoots of recovery in rural India. Do you think these green shoots of recovery will translate into reality?
I think it's already happening on the ground. You see distinct signs of rural offtake increasing, and I think it's gaining traction. The optimism of the people on the field is very high. Rural is really driving demand far more than urban, and I think it's after maybe a couple of years of some pretty average kind of growth, below average growth, in fact. So that it had to happen. FMCG, like all sectors, is a little bit cyclical. And I think we have seen the down cycle. Now we can look forward to maybe several quarters. It's hard to predict of good growth driven by rural.
We had a conversation on the same forum about a year and a half ago, and you said for the first time you've seen a drop in demand and a drop in volume both, and that rarely happens. But right now volume growth is coming back and demand is coming back. What has changed in 18 months that from pessimism we are looking at excitement?
One thing which is pretty simple is that we are operating off a low base. So growth had to happen. The tide had to turn. The good monsoon and a pretty elongated monsoon has helped a lot. I think that's revived rural demand to a considerable extent. And one lead indicator is the lower offtake of Manrega, which is a pretty good indication that consumption is coming back. People are getting jobs, income is happening. It had to happen. The question was of timing, and I think the monsoon has been the key trigger. Also, the political environment has driven perhaps more fuel to the rural economy, and that has been an additional trigger. So monsoon and fueling of the rural economy by the government has been the two big things, further accelerated by the low base of last year.
So Sunil, in this wave of rural recovery, what do you think would, or rather which categories do you think will make a more meaningful comeback as opposed to the entire FMCG segment? And would you say that the comeback or the wave of a comeback is also going to have its own hint of premiumization and upscaling within even the rural segment?
I think both the base categories as well as the ones in the more premium end of the market will benefit. The base categories also were pretty much hammered over the last year or two, so the recovery is going to happen there big time. And premiumization will be a natural corollary of that offtake improving. So both will benefit. Which one will benefit more? It's hard to expect, hard to predict, but I would expect that the premium category will grow ahead of the base category, at least till the rural demand is continues to be where it is.
I also wanted your take regarding quick commerce, and how do you think that's going to disrupt the entire industry, in the sense that the entire way of distribution, the entire way of consumption is likely to change as well. What's your take on the kind of growth that we are seeing in quick commerce and the impact it will have in the industry?
Well, quick commerce is definitely a huge disruptor in the urban areas. But the disruption is of the supply chain, the distribution chain, and not so much in terms of the brands, because the quick commerce guys still sell the brands which the mom and pop retailer sells. So I don't see any issues with the companies as such. Obviously, you'll have to rejig your supply chain to cater to the demands of quick commerce. But that's something which any company has to expect in terms of evolution of distribution. Definitely, the mom and pop retailer is going to be the most impacted, and they are a worried lot. because quick commerce is really taking over consumption very, very big time.
Reframe that question. Would it mean that the distribution margins that a lot of these FMCG companies had to shell out, that would change, or the nature of that would change, and hence the margin and profitability could tweak a bit?
It could be, because as and when the quick commerce as well as the traditional e-commerce gain scale, they would have a bargaining power. So far they haven't, because it's been in the single digits. But we saw that a little bit in modern trade, which seems to have faded away. So modern trade is no longer the force it used to be. It's been overtaken by e-commerce and quick commerce. So it all depends how much they scale up. If they get into strong high teens kind of share of the whole FMCG basket, which is quite likely, then yes, they will be able to negotiate better terms of trade. It would have some impact on the FMCG margins, something to watch out for. But we saw this threat of modern trade come up 20 years ago, and we were able to navigate it quite safely. So I'm sure the FMCG companies will have means to deal with the threats as well as the opportunities of quick commerce.
Sunil, so great having you on the show. Thanks as always for taking the time out. We're going to continue that